Hello, this is Awaken to Truth channel, and I am Michael Smith. Thank you for taking the time to watch this video today. Wanted to give you a quick update on some of the new economic data that has been coming out. Or it actually came out today, and that is that inflation officially, according to the US government, has now hit 7% for the year. And so the inflation problem continues to tick upward, and prices continue to move upward. Prices of oil is nearing a new high as far as this run goes. It's way up today. Natural gas is up. And the question is, are these things simply up because of a function of the market, or are they up by design? I think it's possible that the increase in oil and the increase in gas, natural gas, could be a feature and not necessarily a glitch. Because clearly there is a move to try and push everything towards the EV space. I'm not saying that's necessarily good. I'm not saying that's necessarily bad. But what I am saying is, until the market can fully support that, why would we not continue to make things as affordable for people as we possibly could? Well, if you want people to no longer have one particular mode of transportation and heating, i.e. oil, and you're wanting everything to be switched over to something else, sustainable energies. And I'm all for that as long as it makes sense. But when it doesn't make sense, you choose the option that is more viable at the moment. I don't know if it's necessarily by design, but we clearly see prices are skyrocketing in the energy sector. And so the Federal Reserve is now going to step in and do something. And here is the picture I want to paint for you very quickly, just so that you have a little better understanding of what the overall landscape looks like. And this is a very basic picture. Over on this side, you have the Federal Reserve that has interest rates at 0. And the easiest way to equate that to your life is if you go to the bank and open up a savings account and put money in there, you're going to get practically no return on it. You're going to get well less than 1% return. And inflation is kicking, according to the federal government, at 7%. So you will have lost almost 7% of your money by putting it in the bank for the last year. As I said in the video on inflation, inflation is actually much higher than that because the CPI is calculated different today than it was in 1982 when inflation was 13, 14, 15%. And more than likely, inflation is very close to that today. And so you've got the Federal Reserve on this side saying they're going to raise the interest rates this year, maybe 4 times. And where will that put the interest rate? It will put the interest rate at a whopping 1%. Now, to put that in perspective, back in the early 2000s under the Bush administration, post 9/11, they did an emergency lowering of the rate so that things could really try to open up and they could avoid a nasty recession. And so they did an emergency lowering of the rate, and they lowered the rate to 1%. Today, they are acting as if that 1% will be catastrophic to the markets. So you've got the Federal Reserve here with the interest rates. You've got the national debt over here, which is far larger today than it's ever been. And so when the interest rates go up here, the federal government's payments to service that national debt also goes up. So the question is, does the Federal Reserve have the tools to even effectively fight inflation the way that they did back in the 1980s when the federal government had far less debt? The answer to that question is probably no, but we will see in the near future. So you've got the Federal Reserve here, you've got the national debt here, and in the middle, you've got Wall Street. Now, why is Wall Street so important? Well, Wall Street is important because there's lots of money on Wall Street, and that money is able to gain lots of favor in high political circles. Beyond that obvious scenario, you also have millions of Americans that, whether they know it or not, whether they're educated on it or not, whether they understand it or not, they have been invested into the markets, their 401ks, their IRAs. If you've noticed, and me being a millennial, as I know, you can't get jobs today and think that it's going to provide you a pension that's going to pay for your lifestyle or for your retirement from the time you retire until you die. That doesn't happen anymore. What happens? We have defined contribution programs where we have the IRA products and we have the 401k products. And some of these products can be great, and some of these products can work out very well for people. But my point is, these products are heavily invested in the market. So propping up Wall Street is extremely important on two fronts. Number one, for the power brokers that have all the money, that have elicited the favor of the political world. And number two, for all of the millions of Americans that have made Wall Street mega wealthy by taking their paychecks and investing them into the market via IRAs and 401ks. And so a big downturn in the market is catastrophic to public opinion of the current administration. So I believe every effort's going to be made to prop up the market, and the market is already acting like it's going to have a hard time handling less stimulus from the Federal Reserve and higher interest rates of a whopping 1%. And I think we could see, moving into 2022, 2023, the Federal Reserve find itself between a proverbial rock and hard place of raising the interest rates to fight inflation, balancing the massive national debt that America has, and trying not to have a major market correction in Wall Street. And the question is, can they do all three? And the answer to that is unequivocally no. So there's going to be, I believe, some difficult times on the horizon. The question is, how will those difficult times manifest? All we can really do is wait and see. But I just wanted to take a few minutes, give you a little bit of an update on the inflation front and the economic front, and give you a little bit of information that maybe many of you are aware of, but some of you probably were not. So thank you for taking the time to watch.